Today, Bitcoin retreats amid a tech stock pullback, blockchain lender Figure files to go public on the NASDAQ, and Congressman Bryan Steil, chairman of the House Subcommittee on Digital Assets, sits down with us at the Wyoming Blockchain Symposium to discuss what's next on the crypto legislative agenda. Welcome to CNBC's Crypto World. I'm Talia Kaplan here in Jackson Hole for the Wyoming Blockchain Symposium. We'll get to the latest from this conference in just a moment, but first, let's take a look at prices. Bitcoin struggling this morning alongside a pullback of big tech names on Wall Street. By noon Eastern, the cryptocurrency dipped below the $114,000 mark. The story's much the same for the altcoins. Ether falling more than 3.5% to $4,190. Solana's Sol token also in the red, dropping below $180. Okay, let's talk about the top stories. A blockchain lending company Figure Technology has filed to go public on the NASDAQ. The company revealed in its S-1 filing that it brought in $191 million in net revenue in the first 6 months of 2025, a 22% jump compared to the same period last year. It also reported a net income of $29 million for the first 6 months of this year, compared to a net loss of $13 million in the same period last year. Figure was co-founded by the former CEO of SoFi and offers home equity lines of credit, crypto-backed loans, and more. It's joining a crowded field of crypto IPOs that have rushed into U.S. markets in 2025. Next, stablecoin issuer Tether just hired Bo Hines to lead its U.S. digital asset strategy. Tether said the former executive director for the White House Crypto Council will start immediately to, quote, directly engage and coordinate Tether's U.S. strategy and expansion. Tether CEO Paolo Ardoino also said in the press release that the appointment of Hines is part of the company's commitment to build a strong U.S. presence. For his part, Hines also shared the news on X, saying he was excited to help build an ecosystem that empowers U.S. consumers and reshapes the financial system. Hines left the Trump administration earlier this month and, at the time, thanked White House AI and crypto czar David Sachs, adding that together they had positioned the United States as the world's crypto capital. And last, the state of Wyoming announced it'll launch its own US dollar-backed stablecoin called Frontier Stable Token. The cryptocurrency is being deployed on major networks like Avalanche, Polygon, Solana, and Ethereum, and will be available to the public in the coming days. Now, this comes after the US passed the Genius Act, giving stablecoins rules of the road, and coincides with the Wyoming Blockchain Symposium, where we're speaking with the industry's top decision makers to bring you the latest news. Anthony Scaramucci, founder of Skybridge Capital and chairman of SALT, which is putting on the Wyoming Blockchain Symposium, joined CNBC Squawk Box this morning to weigh in on the stable token and the rise of stablecoins broadly.
I share Secretary Besson's view of this, that's generally good for the U.S. dollar. It means more treasuries, more short-term treasuries, demand for those securities. But I also think it's going to bring a wave of technological innovation. We, at our last conference in Bermuda, we did a drop of stable coins into people's phones where they could spend, I guess it was $100 at the different tourist shops on Front Street in Bermuda, and it worked beautifully. And I think you're going to get to the point where we're transacting using stable coins.
All right, sticking with the Wyoming Blockchain Symposium for our main story. I sat down with Congressman Bryan Steil here in Jackson Hole yesterday afternoon. Digital asset policy is front and center at this event, and the Wisconsin Republican, who is chair of the House Subcommittee on Digital Assets, breaks down what's next for crypto regulation on Capitol Hill. And we're here at the Wyoming Blockchain Symposium. You're going to be participating in a panel with Democratic Representative Angie Craig of Minnesota, where you will be talking all about the Clarity Act, which essentially establishes a regulatory framework for crypto. Now, you're an original co-sponsor of the Clarity Act. You obviously believe in it, and you spoke on the House floor before the House voted yes on the Clarity Act. It now moves on to the Senate, and you said that the Clarity Act fosters innovation and it protects consumers. Why do you think, in a nutshell, it's so important for the Clarity Act to become law?
The U.S. regulatory framework currently doesn't meet the moment. It's often based on rules that were drafted almost 100 years ago. And what it's allowed is regulators, in particular Gary Gensler under the Biden administration, to create rules of the road and enforcement actions to punish companies who are innovating and developing in the space. It led to two things. It led to a lack of consumer protection as many of these companies moved themselves offshore. But it also prevented innovation and development from occurring in the United States. I believe The Clarity Act solves that problem. It puts a clear regulatory framework in place that will allow our regulators to make sure that there are consumer protections, to make sure that any abusers inside the system are addressed, but also will really encourage innovation and development here in the United States of America rather than offshore.
Do you think it's too late for the U.S. to catch up to other regions around the world, the EU, for example? We're seeing some regulatory advancements for crypto here in the U.S. now. The Genius Act stablecoin regulation bill is now law. Huge milestone. Many in the industry are calling it a watershed moment. But do you think it's too late for the U.S.?
The U.S. in some regards is catching up. It was 4 bad years under the Biden administration with Gary Gensler at the helm of the Securities and Exchange Commission. But I'm of the belief that companies want to come to hire employees here in the United States. Why? Because the U.S. has the best regulatory framework globally. We have the best capital markets around the world, and we have the best human capital, the best talent anywhere in the globe. So companies are looking to come to the United States to innovate and develop under our rules, under our regulations, with our capital markets, with our employees. The Clarity Act puts in place the regulatory framework to allow that to happen. You couple that with the Genius Act, stablecoin legislation that is already signed into law, and I think we're at a watershed moment where we're going to see significant investment in the United States, and that's good for workers, that's good for consumer protection, and that's good for the entire industry.
Do you think the Senate will pass the Clarity Act in its current form? I mean, I spoke with Democratic Representative Sam Liccardo last month, and he warned of some challenges ahead. He noted that there are some provisions that are missing from the Clarity Act, things like any prohibition against the president from getting involved in crypto, among other headwinds. He said he'd like to see some changes that would make it a better bill and would garner more Democratic support. What's your reaction to that, and how will that impact the timing of the Clarity Act potentially becoming law?
I think the Senate needs to move quickly. I think the framework that we put in place in the House, in particular with the leadership of G.T. Thompson and French Hill, is spectacular. What we did is we found a landing pad that garnered across the board support from the Republican conference, in addition to a very large group of Democrats coming on board with this legislation. It says 2 things. One, that this landing pad actually has an ability to pass the Senate if it was brought up for a vote. And 2, that the final rules and regulations that were in the bill really met the moment. Now, everybody is going to look at any piece of legislation and say, if they added a tweak this way or a tweak that way, it would make the bill better, it would make the bill worse. What we have is a solid piece of legislation that I'm hopeful the Senate moves on quickly. The president has been pretty clear on this. He wants the Senate to move on this. This is the second of 2 pieces of President Trump's digital assets agenda. I'm bullish that the Senate's going to pick this up in September. There may be changes to the legislation, but I think the core underlying framework is so solid, in the support that we had in the House proves that I'm hopeful that they bring this up, make amendments if they need to, but let's get this all the way across the line quickly.
Now, the Senate is also working on its own version of market structure. So how does that impact the Clarity Act, and what do you think happens with the Senate's version?
Well, the Senate put out their framework. The president and the administration put out their working paper as well. I think they're all actually a really positive comment on the Clarity Act. I think there's some nuance here and there as to exactly how people want to see the rules and regulations of when you go from a security to a digital asset. That's a fair conversation to have. But the underlying framework that exists inside Clarity is a solid framework, and it would allow the United States not only to catch up to countries around the globe that already have a regulatory framework in place, but it will allow us to surpass them. And I think what you'll see, again, is that significant innovation development in the United States, consumer protection, and the Senate moving quickly on this and using Clarity as the base text, I think is essential.
Last time we spoke was during Crypto Week. That was before the House passed 3 crypto-related bills. The Genius Act was signed into law. You mentioned at the time, and you mentioned it again here today, that you think we'll see significant investment in the stablecoin space in the U.S. now that this is in fact law. At the time it wasn't law yet, but you said if it will become law, we'll see those developments. Now, JP Morgan CEO Jamie Dimon said during an earnings call last month that while he doesn't understand the appeal of stablecoins, he can't afford to sit on the sidelines. Citibank and Bank of America, they're also interested in getting involved in the space, as is Amazon and Walmart. So clearly your forecast is coming to fruition. But what do you think has changed since the Genius Act became law here?
Well, I think 2 things. I think there's a recognition of how significant and big the market is for this, both domestically for improvements in the payment rails, creating additional efficiencies for businesses from banking to retail, but also an understanding of the global significance of this. We have seen stablecoin taking off before this legislation was even passed. I think this allows, in particular, regulated entities such as a U.S. bank to enter the market. I think this is particularly important in the global South, where so many people don't have confidence in their national currency. You can envision a day laborer in Argentina or Zimbabwe who works their tail off through the end of the day and gets offered, would you like to be paid at the end of the day in US dollar-backed stablecoin under a US regulatory framework or in Argentinian pesos? And I think what we will see over time is more and more people choosing the option of a US dollar-backed stablecoin under a US regulatory framework. And that is particularly good for US dollar dominance and for the future sale of US treasuries at a period of time where we know our deficit and debt are only increasing.
So last week we reported that a group of Wall Street advocates are hoping to roll back some of the Genius Act. In fact, the group of banking lobbyists wrote a letter to a bipartisan group of senators asking them to revise Section 16D of this stablecoin legislation. That provision says uninsured depository institutions that issue stablecoins, so those that are not protected by the FDIC, can offer some services across state lines, bypassing state licensing requirements, and then they're urging Congress to use market structure to help roll back that provision. So what do you think happens there, and do you think that's a viable concern?
I think as you look inside the Clarity Act, we provided additional tweaks to the stablecoin legislation, Genius, that we think will strengthen and improve that legislation. Again, there's going to be tweaks to this legislation as we move forward. This is a completely novel area of legislation, which is what makes it intellectually so interesting for policymakers like myself and for the broader industry. And so this is going to be a live ball exercise, where we're going to have to make amendments, adjustments to legislation as we move forward to make sure we are protecting consumers and encouraging innovation in development in the United States. And so what we don't want to do is say, now that this legislation is passed, it's set in stone, no changes will ever be made. We don't want to say that. But what we want to say is that the core structure of the legislation that we put forward is going to unleash and unlock significant innovation here in the United States. And again, I think you'll see significant consumer protections that didn't exist until this legislation was passed.
Now, Congressman Steil and I covered a lot of ground in our full interview, including his stance on crypto tax policy. You'll be able to check that out over at cnbc.com/crypto world. Okay, that's all for today, but we'll be back again tomorrow with more from the Wyoming Blockchain Symposium, and we'll see you then.